trading options because of the flexibility that they give us. They tie up far less capital. We love the leverage, but also they allow us to stay active in the markets in far less time on a daily basis. So what are some of the tools that I use to cut down on the amount of time required to track markets? So I like to set a lot of price alerts for myself. You can do this a couple of different ways, and it will depend on your platform. All right, so you can go ahead and create alerts and have those alerts sent to an email or to your phone as a text message, for example. And I do that quite a bit. I like to come in 3 times a day personally and check on my own personal trades. I come in once in the morning, once around lunch, and once in the afternoon. And it typically takes me between 5 and 10 minutes each time to just come in, check my charts, check my trades, and then move on with my day. Now, a lot can happen throughout the day, right? So when I come in and look at my charts, for example, let me bring back Thinkorswim. So let's take a look at EFA. This is one of the global ETFs that I like to trade. Now, let's just say for our example here, we've got these pink dots on the chart. Those are representing a potential short trade. And that entry price, the entry point is right around 53.50-ish, give or take a few pennies. So let's say I'm coming in now. Let's just say that this is my lunchtime update. I know we're a little bit past lunch, but let's just say this is my midday update. If I wanted to mark that, because I don't want to get into this trade unless this ETF is trading below 53.50. Now, I don't want to sit there all afternoon and just watch this thing. What I can do inside of Thinkorswim is right click on the chart, go down to create alerts. There's going to be a box that pops up, and now I can set this alert. So I can tell it, okay, the symbol's EFA. I want to be alerted when the mark is set at or below. So I'm going to click on the drop-down menu and set it to at or below. And I want it to alert me when price is trading at or below 53.50. Okay, now you can also type in a note for yourself as well. So if you want to say, hey, short entry, EFA, and click on create. Once I create that alert, it's gonna, what that alert triggers, let's say price action gets down to that level. That alert's gonna pop up in my platform, but it's also going to pop up on my phone as a text message, and then I can also have it emailed to myself as well. That way, if I'm out of the office, I can have that notification pop up on my mobile device, and I know that, hey, it's time to come in, get my order placed on EFA. I can do this for an entry. I can do it for a target. I can do it for a stop. Okay, so now I've got tremendous flexibility there. So if I'm out, once the whole, once this whole economic shutdown ends and we're all out and about again, let's say I'm at a lunch meeting, you're out at the golf course and it's midday and you've got an alert pop up on your phone, in less than 60 seconds, I can come in on my broker platform on EFA and place the trade. I'm not just locked in an office all day staring at charts. You can also place alerts based on option prices. So let's go over to EFA. And let's say that I've already got a position on. I don't right now, but let's say we do. Let's say we've got a position on, and let's say I'm long the 250 puts. I've got a bearish position on. I'm looking for the stock to move lower. And let's say I bought those options for $2. I bought the put options for $2 per contract, and my target is 100% return. So my target is I want to close out of those options when they're trading for $4. I can create an alert here. I can right click on the price of the option and I can select create alert. It's going to bring up that box and it's going to alert me. I can set it to when the price of the option is trading at or above $4. And I can type in a note for myself as well. So this is my target EFA short. Anything that I type in as a note for myself, that's also going to pop up in the alert. So if you're worried about remembering, hey, what did I set that EFA alert for? Because what if I set the alert today, but the target doesn't hit for another week? You may not, a week from now, remember what you set that alert for. So you can just type in a little bit of a reminder note for yourself and click on create. So now that alert is in place. Now that alert is going to pop up on my phone. It's going to pop up in my email, alerting me that, hey, the price of the EFA put is now at $4. I can close that option out and book 100% return. I go through a lot of my positions. I go through my charts and I set a lot of alerts for myself. That way I don't miss things. So I can still teach a class. I can still be on the phone with students. I can still, go out to lunch. I can still stay active in the markets without having to lug my computer around and just stare at screens all day. The alerts are very, very beneficial. And you can do this. I'm showing you how to do this inside of Thinkorswim. You can place alerts in just about every broker platform out there. The mechanics of how to do so might be a little bit different, but if you're using TradeStation, for example, you can definitely place alerts. NinjaTrader, you can definitely place alerts. Okay, so I mentioned my daily routine. I like to come in 3 times a day, once at the open, once at lunch, once before the close. It typically takes me 5 to 10 minutes each time. It may take a little bit more time initially, or if the market's busy, it may take more time on those sessions. But in most cases, we're talking about 5 to 10 minutes each check-in time. And when I do come in, I'm looking for new setups. I'm looking to manage open trades. And I'm looking to place those alerts or adjust any orders like we just talked about. If you can't come in 3 times a day, find what works best for you and stick to it. Try to come in 1 to 3 times a day. If you can't come in the morning, lunch, afternoon, you can always tweak it. But what I would recommend that you do is try to get into a routine. I know that at 9:30, when the market opens, I'm not answering phones. I'm not answering emails. I'm focused on the markets. I need a 5 to 10 minute window there where I don't schedule anything with customers because I need to focus on my own trades. I do the same thing at lunch. I do the same thing in the afternoon before the market closes. I've got to block out those schedules times so I can come in and make sure that I don't miss things, right? If you find yourself saying, I'm just going to wing it from day to day, my schedule is different every day, you're going to find it very difficult because you're going to get busy. We all know how things stack up and it's really easy to miss things. I'm not saying you have to sit down for 45 minutes. I know you guys have busy schedules. So all you have to do is block out 5 to 10 minutes. Say, hey, for the next 10 minutes, I'm not going to focus on anything else but markets, my trades, and making sure that I've got everything in place. I find that the afternoon check-in, if you're going to use credit spreads, which I highly recommend that you do, the afternoon hours in that last 30 to 60 minutes of the session is really ideal for placing credit spreads. That's when you typically get a burst of volume. You can see what the market has done that day. So you get to see if there's any head fakes, any false breakouts, and then you can place those trades when the volume kicks in right at the end of the day. Now, documenting every trade. This is also very, very important. And it's also a step that most people skip. Okay, getting a broker statement emailed to you every day is not enough. Remember, trading is a business, guys. I mean, if you are open any other business out there, record keeping and knowing where your business stands is very, very important. So when I place a trade, I come in and making sure that I document every trade that I take. And I just use a simple Google spreadsheet, a Google Doc. And I come in and I document key stats. I document my entry point, my exit point. What type of trade was it? Was it a long call, long put? Was it a debit spread? Was it a credit spread? I take a look at the P&L. How long was I in a trade? So how many days did the trade last for me? All that information can be very, very important because I can go back at the end of the week, at the end of the month, and evaluate my performance. What names are working? What names aren't? What strategies are working? What strategies aren't? And that can help me make adjustments. If you don't take this step, it's really easy to be influenced by one individual trade. You have that losing trade on Apple saying, hey, I'm never trading Apple again. When in reality, if you go back and take a look at the last 20 trades on Apple, maybe you've got 15 winners and 5 losses, and you're making money. So when you take a look at that big picture, it's a lot easier to stay disciplined. So it is important to review the trade journal, and I recommend doing this at least once a month. And when you do it, I know it's a little bit difficult right now because we're all stuck at home, but it's easiest to get out of your normal environment. Get out of the office, get out of your house, go to a coffee shop, right? Go to a local pub, grab a beer, and evaluate things, right? Take a look and see what's working and what's not. That way you can get a pulse of your trading business. Again, it's so easy to get caught up in the day-to-day that it's really easy to lose sight of the big picture and what's performing and what's not. I want any change to my trade plan, any change to my trading, I want it to be based off of numbers and statistics. It's very, very important. So here's some of the stats that I trade, or I'm sorry, some of the stats that I track. So entry date, exit date, number of days in the trade, my entry price, my exit price, my P&L, and the type of options trade. I also keep a section in there for notes. Did I make any adjustments on the trade? Did I close out of the trade early? Did I have to hold through a news event? That can be very important, because if I want to know come 4th of July week, I want to know, is it worth trading that week? It tends to be a slower week in the summer. Do I trade that week or not? Well, I can go back to my trade journal and see what has my performance been during the 4th of July week or Labor Day or Christmas. We can base those decisions off of stats. And it doesn't take a lot of time. And this step right here for me maybe takes a couple minutes a day. I mean, it's very, very simple. And the benefit from that process, and I know some of you might look at this and say, I don't have time for that. It just seems like it's unnecessary. I promise you, this is going to be a breakthrough for a lot of people. When you track your trades, good, bad, and ugly. It's always fun to track your winning trades. It's difficult when you have a losing trade, because now you got to sit there and dwell on it, right? You got to record it. Really important, because you can get so much information. It makes it so much easier to adjust and track your business when you're doing so based off of numbers.